Alphabet, the parent of Google, has actually offered to split up parts of its company just so that it'll fend off antitrust lawsuits. And that's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and if you're in the know, drop a meow in the chat. You're watching More Money, let's get it. What's up guys, welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And this is a very interesting developing story because there's a bipartisan group of lawmakers that are saying that Google has way too much power, or Alphabet has way too much power, and so they're trying to break up the company. And so Alphabet just came out and said, hey, listen, we'll do it for you so long as you don't penalize us even more. And let's dive into that a little bit more. And so you can see here that the Wall Street Journal covers this, and they say that Google offers concessions to fend off US antitrust lawsuits. And so what's really happening here is that Google has been the target of several attempts to curtail its massive ad tech business. And really high level, the reason why this antitrust lawsuit is coming is because lawmakers are saying that Google acts on both sides of an ad exchange, and so they have too much power, which they could be abusing. And so Google is saying that they don't abuse it, but it's really hard for them to prove it. And so that's why they're trying to go after it and say, hey, Google, you can't represent both sides, which from the lawmaker's perspective, it does make a little bit of sense, but I just don't know enough about it to sort of opine on it. But in the article, they dive a little bit more into it. Google has proposed splitting parts of his business that auctions and places ads on websites and apps into a separate company under the Alphabet umbrella. Now, nobody really knows if that offer is enough to satisfy the US Department of Justice. I think that it might not be, but we'll see what comes from it. The Department of Justice is actually preparing a lawsuit alleging Google's ad tech practices are anti-competitive, which is an action that could be filed as soon as the summer. So that's what I mean about them thinking that it's anti-competitive. It's because they believe that they're operating on both sides. And at the bottom here, Google actually made a comment. So they said that we have been engaging constructively with regulators to address their concerns. As we have said before, we have no plans to sell or exit the business. Rigorous competition in ad technology has made online ads more relevant, reduced fees, and expanded options for publishers and advertisers. And he's not wrong there. The ad tech business has been growing massively. And you don't just have to advertise on Google if you don't want to. You can advertise on the Facebook platform, you can advertise on other platforms, or you can actually advertise on publisher sites as well, so like newspapers and stuff as well. But if you want the specific targeting capabilities of Google, well, you got to use the Google platform. So in the European Union, a similar case has recently been settled where Google has made an offer to settle a different allegation of anti-competitive conduct related to YouTube. And that's just according to some people familiar with the matter, as it's stated in the article. And so what it says is that Google will allow competitors to broker the sales of ads directly on their YouTube video services. So the question I ask is, could this bring down the revenues for YouTube overall? Well, we'll see how it works out. And in my opinion, the easiest way for them to show that they're not overcharging for the pricing of these ads is that the brokers really get no work, or they get a little bit of work relative to the proportion of the ad spending on YouTube, and that the people at YouTube can show that the overall price that advertisers pay for ads when they use brokers is actually higher overall for the advertiser than if they just place the ad directly. So there's an opportunity here for YouTube to really show that there's not anti-competitive behavior on this platform. Now, YouTube is different than the Google ad space. So these are two different things, but it's something that I wanted to mention. And it's really nice that they highlighted that in this article. And so I just wanted to give you a little bit more detail on the lawsuit. You can see here that Google is preparing for a trial in a lawsuit from US states led by Texas that argues that the company is running a monopoly that harmed ad industry competitors and publishers. And Google is saying that the suit is full of inaccuracies and it lacks merit. And so US senators have proposed a new antitrust bill that would force Google to divest parts of its ad tech business. Now, the question is, overall, do I really think that this will hurt Alphabet's prospects as an investment? I don't really think so. I see two really bright spots for the company overall, and I don't see the Google search going backwards, at least. And so you can see here, this is the model that the Patreons get access to. I've shown this before on the channel. YouTube continues to be a big growth engine for Alphabet, and cloud is another bright spot into the future, and they're both sort of like future focused technologies. You can see that YouTube is growing at 30% in the near term and sort of 20 to 25% in the midterm, and Google Cloud is growing 25% a year forecasted into the midterm. So these are big growth numbers for big future focused segments. And the other bets segment, which nobody really spends a lot of time talking about, could have some big opportunities that could lead to sort of like alpha type growth for this company overall. So in other words, you get two very future focused segments where we can forecast out the growth, and we have this wild card that could lead to huge revenue growth in the future that's totally not being priced in. And in all fairness, I don't even think that YouTube and cloud is being properly priced into the valuation right now, because the market is so worried about headwinds in the near-term ad spending space, which you can see with my EPS and free cash flow per share valuations, that when I just use a terminal multiple of 22.5 times earnings, which is much lower than their average multiple of 30 times earnings, I'm valuing the company at approximately 60% of its intrinsic value. And so you can see why Alphabet is one of the highest purchased companies by super investors. And now, don't just take my word or sort of my valuation for it. You can see that Wall Street analysts are very bullish on the stock. The 1-year price target is a bit low because it does reflect the economic uncertainty in the current environment, but it's still substantially higher than the current share price of $2,400 per share. So you can see that of all of the analysts that cover it, 35 analysts have a strong buy on the name, 15 analysts have a buy, and just one has a hold. So like I always say, don't pay attention to buys and sells, but I would pay attention to price targets that are substantially higher than the current share price. Now, I don't think a 28% premium to the current share price is a huge sort of like diversion with the price target. But once again, I think that that just sort of reflects the current environment. And remember, these are 1 year out price targets. And so I don't think the analysts expect a lot of upwards momentum in this current environment, but that is what it is. And if you want access to that full Alphabet model and all the other models and the tracker that the Patreons get access to, you can get access to that at the lower tier of the Patreons. Now, here's the other cool thing that I don't talk about that often. If you want to join us for a live Zoom call every month where I share my most epic live research, you can get to that at the higher tier of the Patreon. And like I always say, if you try it out and you decide that it's not for you, no problem. Message me in the app and let me know that you tried it and it wasn't for you, and I'll fully refund your first month subscription. Now, I talked about the current economic environment quite a bit, but I actually covered it in a separate video. So Meta, competitor to Google's ad tech business, actually just stated that they're bracing for a serious economic impact. And you can actually get to that video right here.